We are live now, sir.
Okay. Good afternoon, everybody. Welcome to this webinar. We'll wait for a minute so that all the participants have joined. All right. So once again, thank you everyone for joining. I hope I'm audible. Nagaraj, can you confirm?
Yes, you are audible.
All right. So I'm joined by my colleague Nagaraj. He's going to talk about market outlook from the technical perspective. But before I hand it over to him, uh, I'll just spend few minutes on discussing what has happened globally. So first, after a sharp fall, markets started recovering, and last two sessions we had a uh, decent recovery from the lows. About 500 to 600 points Nifty has recovered. Internationally, the one of the uncertainties about the US presidential election is over. 47th president is going to be Donald Trump, and he has now going to enact policies which will be basically inward looking, where he will put tariffs on many places from China and other countries. But at the same time, he's also going to cut interest rates. He'll cut taxes, and he'll also force interest rates to go down. We have FOMC meeting tomorrow evening in US time. So day after tomorrow morning, we expect another 25 basis point cut in the US. Now, after that cut, I think we will have also uncertainty about the interest rate cut getting over, and that will help India start cutting rates. So uh, after the this calendar year, next calendar year from January to March, we can expect India to also start cutting rates. So a lot of uncertainty will get reduced because the events are now out of the way, and market should have a relief rally, and that's what we have seen in last two sessions. Overall, earning wise, we have a soft earning season. Many of the companies have announced numbers which are much lower than the market expectation. So that means that the indices are not going to have a runaway rally. The gains are also going to be restricted from here. And let's also see what is happening is the last 2 days, the rally, we've seen that the PSC, public sector enterprises, have started moving well. IT and metal and mid cap, small cap stocks have started performing well. Still, the consumption related stock or pharma are relatively underperforming, while metal, IT, public sector enterprises are leading the markets from here. So what are the levels which to watch out for? What has happened in the market in last couple of sessions and other things? I'll invite my colleague Nagaraj to present his views on from the technicals. Over to you, Nagaraj.
Thank you, Devarsh. Am I audible?
Yeah, you are audible. Go ahead.
Yes. I want to present a chart. Omkar, can I present the chart right now?
Yes, sir, you have the rights.
Okay, right. Is it visible?
No, not yet, sir. You have to click on share and then you have to select entire screen.
Okay. I think it is now visible.
It is loading, sir.
Can you please check now?
No, sir.
Still,
It
it's
is
still
sharing.
it's still not visible. Only the blank screen is there.
So just try to disable your webcam and then you can reshare.
Okay. Now, my chart is visible.
No, no, it is not visible.
Okay. Okay. Anyway, we'll speak from the back end. Friends.
Once, 1 second. What I'll do, I'll try to present here. I'll show you Iris. Can you see Iris now?
Yes, yes, I can see.
Okay, you use
Okay.
this. Use this. Okay. Yeah,
Okay.
you
Yeah.
tell me. I'll try to.
Okay, okay. Friends, welcome to Midweek Market Outlook webinar. We have seen a lot of things, and if you look at the intraday charts, we have seen some continuous selling pressure emerging from the higher levels, and recently we have made some good bounce back from the lower levels. And market was initially was coming down as per the lower tops and bottoms on the daily chart. We can see friends, this is the daily chart. Lower tops and bottoms was there, and before bouncing back from the support of 23,800 odd levels. Now, the chartically, the previously in the over the last few weeks, we have seen market was continuously down. Now, the current chart setup, the last 2 days of upside bounces is indicating that market is showing some signs of bottom reversal. But we need confirmation regarding this. So, confirmation is this that we have a strong resistance somewhere around 24,500 odd levels where daily 10 and 20 period EMA is also coinciding. Over the last few weeks, last 2, 3 weeks, what we have observed that smaller resistances have become major resistances, and market has declined from the hurdles. And important supports have broken easily one after another, and finally, market has showed some respite at the lower levels. So on this front, market was in a downtrend. The first indication of 24,500 breakout is going to confirm the bottom reversal for the market around 23,800 levels. So on that basis, the market confirmation of the bottom reversal could open the quick up move towards the next resistance of around 25,000 odd levels, which is going to be the next hurdle in the near term. So this is regarding Nifty. On the Nifty long term, if you look at the weekly chart, Joshua, if you can put the weekly chart, yeah, what we can observe is, I'll put the weekly chart. See, friends, if you can zoom out, what we can observe is a larger degree of high tops and bottoms. If you can see the last 1.5, 2 years charts, what we can observe is the higher tops and higher bottoms on the charts. And the currently market showing the long lower shadow itself is indicating that a strong buying is emerging from the lower levels. So we could consider once the market moves above that Nifty moves above the hurdle of 24,500 levels, one may expect the confirmation of this higher bottom reversal. Friends, on the long term, the higher bottom reversal means previously also we have seen the couple of higher bottoms during the election. This is the long lower shadow is signaling the election result day where the market has declined sharply and recovered even steeply from the lower levels. And previous to that, here also market has formed a higher bottom on the weekly chart and recovered and moved up significantly. So if market confirms the higher bottom reversal, we are likely to see good amount of upside moment in the market. The only thing is that we have started the process of the bottom reversal with the 2 days of strong upside momentum. Market is sustaining the upside bounces and placed at the hurdle. Even though placed at the hurdle of around 24,500 levels, there was no sharp selling interest, intraday volatility at the higher levels. That means that we are likely to sail through the hurdle of 24,500 odd levels. And after that, the next target would be a quick target would be around 25,000, and some more is going to come once the market confirms. Now we'll see the other things. Bank Nifty. The bank Nifty was outperforming the Nifty previously, we have seen, but in today's session, it was lagging. Currently placed at the hurdle around 53,000, 52,500 odd levels, where continuously the bank Nifty is forming swing highs. On a broader phase, this whole pattern is looking like a consolidation. We can say that some kind of accumulation is going on at the lower levels, where the market, that bank Nifty is not declining. So once this consolidation moment, as per technical, we mentioned this horizontal band pattern. Once it gets breakout, the size of the movement will likely to occur. So there is a strong hurdle around 52 500 odd levels in Bank Nifty, and we believe that once it takes out, then the next target would be around 53 400, 53 500 is going to be the next resistance to be watched for this Bank Nifty. So these are the snapshot of the market where the market has placed, and there are certain positive indication in most of the sectors as well. We have seen some IT bouncing back from the lower levels. IT was underperforming quite a bit of time. It has moved down, and after a healthy correction, IT has bounced back in the last two sessions, which is indicating that more upside is likely. This is the weekly chart where the breakout has failed. Actually, it was a breakout in the last week on the weekly, but seems to have failed in last week, and the IT sector has moved up. This is positive pattern development, a positive indication, and here also we can see some kind of a rounding bottom type formation in IT sector on the daily chart. So these are all indicating that IT is likely to go further. And the next sector I would like to discuss is automobile. Automobile was lagging in the last few weeks, and recently we have seen some bullish pattern formation in the automobile sector at the lower levels. And the automobile sector is currently placed at 200-day EMA, and I'm expecting this bullish pattern is likely to impact on a positive note in the automobile. Currently, on the other side, FMCG and pharma are showing a lackluster moment. There is no still there is no confirmation of any reversal in the pharma as well as uh, FMCG sector. This is the pharma. Pharma is still showing in a range bound action, currently showing, though moved up, the overall trend setup remains range bound. If you look at FMCG, FMCG is, though placed at the support, not showing any significant upside bounces. The trend remains weak for the FMCG. What we mean to say is FMCG pharma could consolidate further, or could from the lower levels they can outperform. But the other sectors like PSU banking, metal, and realty are likely to outperform. This is the PSU banking sector. What we can observe from this here is there was an attempt of downside breakout of the range, and that immediately the sector has bounced back, indicating the false downside breakout of this range moment. This is a positive indication, and we suggest uh, more upside for this PSU banking stock and even PSU banking sector as well. The 7,250, 7,300 is going to be a strong resistance for PSU banking sector at the higher level, where the gap is placed at the high. So these are all inputs and snapshots of the market, broader markets. Even let's discuss about the broader markets. Nifty micro cap, Nifty mid cap, and Nifty small cap. First, look at the micro cap. Micro cap was showing some negative momentum. Actually, 2 days back, the red candle itself is suggesting some lower top formations, but immediately in the next two sessions, it has bounced back and negated the reversal pattern and closed at the higher levels. This reversal, this negation of the bearish pattern itself is indicating the more positive bias for the micro cap. Let's look at the mid cap, Nifty mid cap. We have seen some good traction in mid cap stocks in the last couple of sessions. This is what exactly happened in the mid cap. Mid cap was moving in a range, it slipped down and moved up. This is a classical bottom formation for the short term for the mid cap sector. And this chart pattern is indicating more upside is likely to come for the mid cap. That means we are likely to see some buzzing in the mid cap stocks ahead in the short period of time. In the Nifty small cap, we can observe the similar kind of a thing. The negative pattern has been negated as Nifty, that small cap has closed at the higher levels. and with the higher bottom formation. That is also suggesting that more upside is likely in the small cap stocks as well. So net to net, markets are poised at the reversal. Bottom reversal is likely. Once Nifty moves about 24,500 levels, we could see some good confirmation of the bottom reversal, and that could take Nifty towards the 25,000 immediately and more higher levels in the near term. And that's all from my side. Now, if you have any question, we'll discuss the questions.
Yeah, participants, if you have any questions, you can put it in the chat box and we'll try to answer them. Okay, we can close. Thank you everyone for joining.
Thank you.